Welcome. I'm Dan Rahill, Managing Director with Wintrust Wealth Services and past Chairman of the Illinois CPA Society. At the Society, we put together a series of 8 short videos on the CARES Act, the third in a series of monumental COVID-19 relief packages. This is our third video on the most talked about provision in the Act, the Payroll Protection Program. And with that, let's begin. In my prior video, I talked about the Economic Injury Disaster Loan Program, the EIDL, much smaller and easier to administer program for individuals and small businesses. The Payroll Protection Program is also a small business administration program that's been expanded under the CARES Act. $349 billion in initial funding. It has forgiveness eligibility, which the EIDL also has to the tune of $10,000, but this is a much bigger program. Details of the loan: the covered period is February 15th to June 30th of 2020. Again, the debt forgiveness provision is limited to an 8-week period from origination of the loan, and you can both apply for a PPP loan and an EIDL loan, but the proceeds must be used for different purposes, as will be explained. Eligibility: under the PPP program, under the CARES Act, any small business concern, nonprofit organization, veterans organization, if they employ not more than the greater of 500 employees or the SBA size standard by industry. Sole proprietors, 1099 contractors, and eligible self-employed individuals are allowed to apply for these loans as well. Documentation, of course, is required through an SBA-approved lending institution. That's the difference between EIDL and PPP. In the EIDL program, you apply directly online with the SBA. Here, you need to go through an approved lending institution. Eligibility: you must have less than 501 employees per location. The per location is an exception made for the hospitality and restaurant industries with NAICS codes starting with 72. There are also affiliation rules applied here in coming up with the 500 employee requirement, and you must be cognizant of the fact that you don't run afoul of those affiliation rules. And those, by the way, do also apply to nonprofit organizations and veterans organizations, unfortunately, for those organizations. Businesses that are ineligible for the program include banks, life insurance companies, businesses located in a foreign country, gambling activities, any illegal business. I've been asked about cannabis businesses, since those are technically federally still illegal. Those do not qualify. But private clubs and businesses that limit membership for reasons other than capacity, such as country clubs, unfortunately would not apply for the PPP. Let's talk about the maximum amount of the loan under this program. It is $10 million, or the average total monthly payroll costs multiplied by 2.5, and we'll go over an example in a minute. The amount of the loan also includes any outstanding amount of the EIDL loan discussed previously in Module 2, and that gets rolled into this loan amount. There are exceptions for seasonal employers or employers that have not been in business for a full year. What constitutes gross payroll that goes into the 2.5 times compensation? Though that includes salary, wages, commissions, or similar compensation, payment of cash tips, vacation pay, allowance for dismissal or separation, retirement benefits, state or local tax on compensation of employees, such as FUTA. For sole proprietors or independent contractors, includes wages, commissions, income from net earnings, as long as those wages are not more than $100,000 per year on a cash basis. Payroll costs exclude annual compensation of an individual employee in excess of $100,000, which is prorated for the covered period. Cash compensation in excess of $100,000 is not allowed, but non-cash benefits above that amount are allowed. And that was an issue that was clarified in Q&As on April 6th by the SBA. Let's talk about allowable uses of the PPP loan, because there are restrictions on that. They must be used for payroll costs, health benefits, any interest on mortgage debt, but not including principal repayment, just mortgage interest, interest on other debt obligations, rent, or utilities. That's what the proceeds must be used for. How to obtain a loan? You obtain a loan by making a good faith certification to an SBA lender or approved FDIC insured institution of your current economic conditions make it necessary to request the loan. You do not have to have another loan pending. You do not have another loan pending for the PPP program or previously received a PPP loan, so you only get one. And you must certify that the funds will be used to retain workers or maintain payroll or make mortgage payments, lease payments, or utility payments. There is no application fee. They waive the requirement that the applicant must be unable to obtain credit elsewhere. There are no personal guarantees required. And you get to defer any repayment for a period of 6 months. Now this is important. What are the loan terms? The term loan will be for 2 years at a rate of 1%. This has been clarified since the original act was passed. 2 years at 1%, but there is no prepayment penalty if you pay it early. Here is a key feature of the PPP. It's the potential loan forgiveness feature. During an 8-week period, starting on the date of loan origination, you can be forgiven the covered costs incurred and payments made. But forgiveness only includes, and there are a few restrictions here, payroll costs must be at least 75% of the covered costs. Stated another way, non-payroll costs cannot be more than 25% of the amount forgiven. The costs in the 25% include interest on mortgage obligations, rent, utilities. So again, 75% must be for payroll costs of the amount forgiven. The forgiveness cannot exceed principal, but here is a very interesting feature. The forgiveness is not taxable. There are further restrictions. The potential loan forgiveness reduction shall be further reduced based on the reduced number of FTEs that your organization has over this period. And FTE is a different definition from headcount earlier. And here is a simple example. This gets much more involved, but in the April 6th and April 8th Q&As issued by both Treasury and the SBA, they go through multiple examples of how to compute this. But in a simple example, you had 100 employees a year ago, and you have 50 employees today. Therefore, your loan forgiveness is limited to 50% of the loan. That's the overall loan forgiveness restriction here. Restrictions can be eliminated, though. This FTE reduction can be eliminated if you rehire employees by June 30th of 2020. And finally, in a very interesting twist, and this could change because we're not sure if this was intended or not in the law, while the loan forgiveness taxability is clear that it's not taxable, are the payments, the salary paid by the loan forgiveness, deductible? Said in another way, do you get to not include the $1 million in taxable income? That's clear, but then you also get to deduct the salary that you incur. That's paid for by the non-taxable loan forgiveness. You could end up with, and we think right now, you end up with a net $1 million in a $1 million example net deduction in this situation. Correlation with other CARES Act provisions, you'll see that acceptance of and receipt of the PPP loan eliminates the ability to obtain employee retention credits, and any forgiveness of the loan will prohibit you from delaying payments on the employer share of payroll taxes that will be discussed in Module 7. Other general considerations, SBA and approved lenders have been flooded with applications on April 3rd for small businesses and April 10th for independent contractors and sole proprietors. Forgiveness is not automatic, so that must be approved by your SBA lender. And finally, in running the numbers, you need to calculate, is it better for you to do an EIDL program plus the PPP, or the EIDL program plus the employee retention credit, and again, that we discussed in a future module. With that, this is the end of Module 3, the Payroll Protection Act. This was a 10-minute long video, but the longest of all our videos. This was the most complex feature of the CARES Act. With that, I thank you for listening, and please look forward to Module 4, which are individual program updates. Thank you very much.